Hello and welcome to this week's US stock market report. I'm Gillham, the Chief Analyst here at Wealth Within. This week I'm going to be asking the question, are you a trader or are you an investor? And then I'll dive into the Dow Jones Index, the S&P 500, and then we're going to take a look at the telecommunications sectors by looking at AT&T and Verizon and their charts. Every week we get hundreds of people contacting us about getting into the stock market. Some are beginners, some have little experience, while others have been in the market a lot longer. Now all of these fit into one of two categories. Either they do not know where to start, either investing or trading, or they've gone down the wrong path to get their goal and are struggling. For the most part, we find that people do not understand the market or what is required to be profitable. We also find that people, through listening to the financial world, the media and others, have a very wrong perception of what investing and trading is all about. So let me sort this out for you today. Investors come in two forms. The first is the buy and hold investor, who simply purchases some stocks and leaves them alone for the long term. Now, they may have used a stockbroker or a financial professional to assist them in selecting those stocks. But in my experience, it's highly likely that they read information somewhere and they made their purchasing decisions this way. Basically, they have little or no knowledge or strategy, and they practice what I call the buy and pray method. This is why so many portfolios perform very poorly. Then we have the active investor. The active investor is very much like the passive investor, however they spend more time selecting stocks and adjusting their portfolio in an attempt to increase the returns that they might get from just being passive. The active investor will again get their information from the same sources, or they may subscribe to some regular stock tipping report. Again, they are largely making decisions with little or no knowledge and strategy. That said, most tell me they have a strategy, and when asked to explain it, they are unable to articulate it properly to me. Now let's talk about the traders, or those who believe they are traders. Before I do, there's an old saying that roughly goes like this: the illusion of knowledge is more dangerous than not having it. In the stock market, the majority of those who call themselves traders fit into this statement, and that's why 90% of traders are not successful long term. Traders also fit into two categories. The first is those who believe they are traders and those who actually are. The word trader implies something. In the business world, every business that's there to gain revenue and has cost is said to be trading. You can be running any business selling all manner of goods and services, and your goal is to have a product that you sell for more than it costs you. In the world of the stock market, the word trader is bandied around too much, and in the wrong context. The word trader implies professional. Yet all the time I have people saying that they are traders, yet all they've done is opening a broking account and they've bought some stocks. Very much like the active investor. And so in reality, they are not acting professionally, and I would not consider them to be traders. Now these so-called traders are the majority of people I talk to who call themselves traders, and almost exclusively they have no training, skill or strategy. We then get to the real traders, and again there are two types here: those who trade to win and those who trade to not lose. Let me explain. Those who trade to not lose do all of the free courses out there, they surf the web for hours on end and maybe read a few books. Basically, they are attempting to become a professional to supplement or replace income, yet they resist doing what they know they should. Meaning they think that by not paying out all the money to get a good education and get the right tools, that they would somehow magically become a trader. Free courses are free for a reason, and it's not because they give you great education. In my experience, all of the traders I speak to in this category is that they are inconsistent, confused and conflicted. This brings us to the traders who trade to win. These people know that you need to treat trading as a profession and not a hobby. And this requires the right education, knowledge and skill, not just any education and a half-hearted effort. These traders know that in order to succeed, they need to earn the right to make the returns, as success is not achieved by chance, but rather by choice. Okay, let's get into the chart of the Dow Jones Index. On the screen now, there is a weekly chart of the Dow Jones, and quite interestingly, if we look at the current bar, we see it gapped up a little bit on what it closed the week before. It gapped up and it opened at 25,372. It had a low of 24,668 points, closing at 24,946, just above its low. That's what this bar is actually telling me is a little bit bearish. So obviously the buyers came in earlier in the week after a strong week prior. The week prior, you can see here, very strong bar where it opened near its low, closing on its high. But at this point in time, the Dow is struggling to get through this sort of 25,400 point level and stay above it. So this low close, and it was roughly below half of the bar's length. That's suggesting it's slightly weak at this point in time, although the buyers have come back into it later on in the week. If I go and look at the daily chart, you'll see here in the last part of the week they did come back in, but they're not coming back in strong. So over the next few days, if this market starts to fall away a little bit, then I would suggest then it has some further southward moves, and it will most likely go below that low of 24,668 over the coming week. So at this point in time on the Dow, it's a bit of a wait and see. Let's have a look at the share price index, or the S&P 500. You can see here on the monthly chart of the S&P 500, it does look really, really, really strong. And I'll just bring it up. And the bar is a little bit different, obviously, on the monthly chart. Let's bring it down to the weekly so you can compare it to what the Dow's been doing. And you can see here the same, a little bit more bearish now on the S&P 500 than the Dow. Obviously, it did gap up again, try to trade up a little bit, but closing right near its low. But again, it's saying the same sort of thing. There's a bit more weakness here. You're probably looking at those top stocks in the S&P 500 are the ones that are actually bringing it down. This week, I wanted to get into a couple of stocks. I wanted to talk about the telco industry in the US. I'm going to bring up AT&T and Verizon, or I think that's how you say Verizon. But I'll bring that up anyway, and we'll have a bit of a look at those couple of stocks, because the telco industry is a very good industry. It's a growth industry, obviously, with mobile phones or what you call cell phones over there. So it's a great industry to actually have stocks in your portfolio. On your screen now, you're going to be able to see AT&T, and on the left-hand side, you're seeing a monthly chart, and on the right-hand side, you're seeing a weekly chart. I'm just going to bring up the monthly chart briefly, and you can see here how AT&T, which is it's a very, very big provider of telecommunication services, and I think it's the largest one in the US. And you can see here how more recently it had a high there at 43.89, which is very, very close to this prior over there at 42.97. It's struggling to get above that level. That said, this does look bullish since 2008 to this recent high here in July 2016. It does look a little bit more bullish. I would suggest if we see some nice movement through here, it will start to go up. So this is spouting to me that there's possible opportunity in this stock over the coming months. Right now, as you can see here, it's opened near its low on the monthly chart, and it's closing higher at this point in time, and it's likely to break through this sort of little downtrend here. So if I put a trend line on this stock, you can see through here, once it starts breaking through that area around that $40 mark and closing above it, that would say to me to get into this stock and take the next run up. I'm going to go through now, as I said, I look at Verizon, or Verizon. I'm not sure exactly how you like to say it over there in America, but again, you're looking at a nice little volatile stock here. Let's open the monthly chart. You can see it's been trading sideways since April 2013, and it's slightly below that area, but there's a lot of resistance around $54. If I go back on this, you can see here, fairly similar. There's a lot of resistance right across this chart around 54 to 56, 58. It's not as bullish. I can't see this as being as bullish as AT&T at this point in time, although the current month it is. Looking at the chart, if I just scroll it up a little bit, you can see here it is closing higher than it opened. It did have a very, very bearish February. So for me to get really excited about this, it's really going to have to pull up from where it is sitting around that $49, $50 mark. It'd have to push through that sort of, it's going to have to rise up through that $57, $58 mark before I'm going to get too excited about it. That said, I wouldn't put it past it, but as I was saying just a minute ago, I think AT&T a much better buy, not right now, but wait for 1 or 2 months and you might have a really, really nice trade going for the next few years and some nice profits on that. But that brings me to the end of this week's report. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.